Hello, Navigators, and welcome out to your daily currency recap. This is Ankit here, and I'll be breaking down today's market price action. It's a Wednesday, March the 12th. Let's get into it and make sense of these markets. As always, we'll be breaking down today's market price action by looking at broader market analysis, take a look at what's happening in the currency baskets, and most importantly, what's happening on the news front. And then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, let's just jump right into the headlines and numbers. Well, let's just jump in the headlines here. And the market did recover today. But one of the things we're noticing is that it wasn't really a robust recovery. Still a lot of downward pressure that still remains. So this is, again, not a good sign. It's not really a big V-shaped recovery. We're just bouncing here a little bit, but that's just an anemic bounce. So we are still seeing that downward pressure in the markets. We had this CPI, US CPI from this morning, and that was lower than expectation, and it definitely caught some traders off guard. But if you take a look at this yields today, one of the first things we take a look at is how the bond yields are doing. And you can see that we had a little bit of a drop in the yields, and look what happened by the end of the day. It recovered. So despite of that, the inflation report, here we are with the yields. It looks like it wants to go higher. So this is where, you want to read into the price action here a little bit. And if we start to markets ignore that number, that means that there's more underlying pressure, more to the upside here. So it seems like it's totally ignoring that. Now, if you take a look at the US dollar, well, US dollar also had a very similar reaction what we saw in the yields. But the difference is that the dollar did sell off towards for the most part of the day. So a bit of a mixed price action. Yields was doing one thing and the dollar is kind of doing the other thing. So let's just jump right into the numbers here and see how things moved and with the percentages. And you can see that today, even though it didn't seem like a robust day, there was definitely a lot of intraday movements. So one of the things that stood out to me is the euro weekend. Remember, euro has been on fire, and I talked about it briefly last week, where the euro is rising with this yields rising in the eurozone. So euro has been pretty hot, and we're just seeing a first pullback here in the euro. We'll take a look at the chart and see if we're really losing that momentum. If we look outside. Elsewhere, it was a pretty good, pretty straightforward risk-on day. CAD was the strongest, Aussie strong, and Kiwi is strong. Now, on the weaker side, here we are with the Japanese yen being on the weaker side. Dollar actually was mostly flat. And then we're taking a look at the Swiss franc, and that was mostly flat as well. So that's really what we have going on in these markets. There's definitely, big shifts happening between risk-on and risk-off. But the important thing to kind of watch for is this relative strength of weakness. What's more relevant in what day? A day like today, we have the yen that was starting to show some weakness yesterday. And then here we are pulling back. And the dollar, which looked more terrible, was actually okay. So there's definitely a lot of back and forth in currencies. Now, here we are with these broader market numbers. And you can see S&P up 0.5%. We're taking a look at World Stock Index up 0.5%. Crypto slightly up, gold slightly up, and then we had a big move in the oil. Now in the crypto world, pretty mixed here. We have Bitcoin Cash doing up, but then overall, nothing too spectacular. Now, as far as the market outlook goes, nothing really has changed. Here we are in the chart. You can see that we are bouncing, but again, nothing. That the candlestick is still looking pretty weak here. We started off much better, and then you can see we end up with a bit of a red candle today. So it's just telling you that there was definitely a lot better price action before the market opened, and we struggled during the day. And that's what really the theme here we're noticing is, markets open up and there's definitely more downward pressure that comes towards it. So from the top to the bottom, we had almost a 10% move, which puts us in the correction territory. At this point, it definitely looks extended. So I do like seeing a little bit of a recovery here. But then I think that recovery likely to be sold. I think that's really how things are setting up here. But for now, you can just see that, hey, it's not It's not falling apart, but it's not really booming higher either. So it's a mild sort of a bullishness here in the short term. Now, as far as the schedule goes, we don't have a whole lot overnight, but then tomorrow we have the PPI numbers coming out of the US. Again, looking at the CPI numbers today, I'm not really expecting a whole lot out of the PPI tomorrow. So I think you're just better off looking at where the markets are going, where the relative strength of weakness is. So let's just jump into our currency analysis and then take a look at the velocity score one by one.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, let's just jump into the velocity scores here and start with the dollar and the yen first. So one of the things I want to point out, this is on the daily chart, and notice that at this point, yen has been doing really, really well. And you can see in the last whole month that the yen has been on the better outperformer. At this point, it looks like it's trying to give a bit of a double top here. As I go out in the chart, you can see that this is a critical level of resistance. And exactly that's where we're kind of failing here. Now, if I take a look at the chart, this is the first time it's actually falling below this exponential moving average. So at this point, it could have a little bit downward pressure here. So I think just looking at the yen here is definitely losing some of that momentum here. Even though we have some roller coaster moves today, yen didn't really respond as much. So just kind of keep that in mind here. On the other hand, we had the dollar did weaken as well. But if I really zoom out here, dollar is just range bound here. So it's not really a great buy. It's not a great sell. This is just a range bound here. So if it breaks lower, that's will start the next leg lower. But I think in this situation, it might just go back and forth, especially if you take a look at the yen. And, if the yen is doing really well, then you think the dollar will do weak. But right now, there's a bit of a negative correlation there. So we could see if the yen continues to pull back, we might see the kind of dollar holds in there. And then here we are with the Swiss franc, kind of similar thing. You can see that this thing didn't really take part much in the movements today, but this is also range bound here. If this breaks that support, probably get a little bit more downside risk, but right now this is range bound. But if I take a look at the daily chart, we are seeing the exact same thing. It's topping out at this resistance level. So, we have been in this giant range bound condition in the Swiss franc, and it continues to be that case. Despite of that market volatility and all, it's not really clearing out those levels. So I think this is, again, range bound. Now, euro is the one that I want to pay a little bit of attention because, you can see that today's move was one of the more significant pullback, in the last few days. So here we are, 1, 2, 3, a little pullback here, 4, 5, 6. This has been on a tear. Now, if I go on a 4-hour chart, you notice that for the first time, we're actually, weakening. We did weaken over here. We had a big rally. But it is weakening a little bit here. We got the RSIs kind of moving lower as well. So maybe I expect a little bit more pullback in the euro. So, we talk about, we want to be there when the momentum is there and get out when the momentum is out. It seems like the momentum is sort of fading over here. So it's better to take profits on the euro and then sort of come back to it. Now, pound, on the other hand, was more orderly, but this thing also broke out of the resistance and pulled back. When I take a look at the daily chart, this is still going higher. It's just kind of going higher in a slower pace. Now, if I take a look at the other currencies, so I'm going to start with the CAD here. CAD has been definitely more sort of turbulent here because, there's a lot of negative rhetoric between the U.S. and Canada relation right now. And, you can see that there's tariffs coming along. There is, the new tariffs get put on. We're definitely seeing that reflecting in Canadian dollar price. Shorter term today, we got a little bounce here. But remember, one of the things we're going to keep in mind is that if the trend is strong, we want to sell those rallies here. So I will wait and see what happens with the CAD, but I definitely want to steer clear for the CAD because there's more negative news coming out of the currency, which could be a little difficult to hold along because that could reverse pretty quickly here. Now, things that are kind of doing okay, but this is the Aussie and the Kiwi. You can see that the both are okay in the short term, but when you look at the daily chart, you realize like, okay, they're not really a screaming sell here, despite of the market volatility. Maybe just in a little bit of a bounce here. So we could see a bit of a strength in here, but just keep in mind is that this is the pattern that you were trading, and now this is the prior support becomes a resistance. So this is 1, 2, maybe this is the third one more day of rally, and maybe it turns lower. That's really the pattern that we are in. We are more like a bear rally pattern in the Aussie and Kiwi. But again, if the market continues to recover, then we could see a little bit more buying coming in those currencies. But if the market really rolls over again, then I think those currencies likely to roll over with the market. So that's really where we are with the velocity score. Like I said, we're getting a little short-term pause in the markets, but that doesn't mean that it's a good reversal time because that recovery is still pretty weak. Now we'll take a look at what happened with the euro. Euro's pulling back. We have the yen and the Swiss franc pulling back. So all the things that we're doing really well is sort of pulling back. So maybe there's going to be a little bit more further pullback in the next 24 hours. And the things that we're actually doing the worst is sort of having a bit of a recovery. So that's really the trade here. The dollar is kind of in the middle. The pound is kind of like in a +1. I think if you're looking for certain opportunities, let's take a look and see if we can find some setup between the euro, Aussie, euro, Kiwi, euro, CAD, and compare that against the yen and the Swiss franc. So let's just jump into some possible trades ahead. So looking at the possible trades ahead, I mean, here we are. I'm going to start with this euro Aussie chart. So you can see that this is, talk about that consecutive day run. Now, if we just go from the chart, now this looks like a bearish engulfing candle. Now, this likely to lead with some further pullback, especially get down towards this exponential moving average. I think I do like euro Aussie further pullback on the downside. Here we are with the 4-hour chart, beautiful setup right here as well. We got a falling pattern here. We got a resistance right here. So I do like the euro Aussie here. 4-hour, even an hourly chart, they all sort of lining up as well. If I take a look at euro against the Kiwi, I'm assuming we're going to probably see a very similar setup here. Yeah, on the daily 4-hour chart, you can see it's reversing here. The daily chart candle, pretty bearish here. So again, after that big epic run, I think there is some more room for sort of a pullback, some correction patterns here. Like I said, CAD, I'm kind of staying wary with. It's the same pattern here, but I'd rather go with the euro Aussie or euro Kiwi because, you don't have to worry as much about what the news is going to come out, especially as Canada's been more in talks. I think that makes it trading the currency pretty difficult here. Now, we can do the exact same thing. Let's just say look at euro Swiss franc and see which one looks better. So you can see that this thing, euro, is definitely been the more outperformer, but in the shorter term, it looks like it's wanted to come back here. So euro still looks pretty good. Swiss franc is also pulling back with as well. Let's also take a look at some of the yen crosses here and see if they look any better. So we have the Aussie yen here. Let's take a look at how that looks. So you can see that it is, this thing is not ready yet. It's right at this moving average there. Maybe if it breaks above that, it will have a bit of a recovery here. But I think on a 4-hour chart, you can see that this thing is already in that recovery mode. So I do like those euro Aussie, euro Kiwi. I think they look a little bit better here. And then we can also take a look at these yen as well. But remember, yen is more volatile. Keep a close eye on dollar yen because this is the one that I was watching. You can see this thing had a bit of a recovery here. We're still below this moving average. If we can get above this moving average, then we can see that there's a more recovery, in store for us here. But overall, you can see that this thing has been in a downtrend for the most part for the last few weeks. So all bear rallies has been sold. So be very careful with that. You want to be selling those bear rallies and only until you start to see those reversals taking place and we get above these moving averages, then the downward pressure will sort of dissipate there. But I think this one, It looks a little bit unclear to me. I think those zero kiwi looks a little bit more clear. So let's see if there's more continuity on those trades. So just to summarize here again, I think that those intraday volatility, we're not out of the woods yet. We're still seeing that volatility. Depending on where the markets are going, you get this downward pressure, you get the recovery, and then based on that, risk moving from a positive to negative. Remember that's how currencies are moving along with it. So this is a period where you want to be paying attention to correlation, seeing how things are moving. And again, if this is just a bear rally and it's going to give us a shorting opportunity, then start looking for where's the next big trade. So look for things that are moving and don't go for things that are not moving. That's the game plan here. Thanks for joining. We'll see you in the next one. Happy trading.